You're listening to AI PRISM from Seoul Economic Daily.
The U.S. 30-year Treasury yield just hit its highest level in 19 years. And Korea's growth assessment was upgraded in the same week. Korea's July exports jumped 62.8% from a year earlier, with a $30.32 billion trade surplus. The U.S. Treasury is now deploying 3 separate tools to push long-end yields back down. China is funding its AI build-out through capital markets rather than the state budget. It's Tuesday, August 11th. Here's why global investors are paying attention to Korea today. 2 forces are pulling on Korean assets this week. One is the U.S. long end, where the 30-year yield touched 5.28% on July 31st, the highest since July 2007. The other is Korea's own cycle, which the Korea Development Institute upgraded in its August assessment on the strength of semiconductor exports. Here's what the numbers show. Korea's July exports rose 62.8% year-on-year, and ICT shipments, led by semiconductors, surged 178.2% on a daily average basis. The trade surplus came in at $30.32 billion. Facility investment climbed 21.7% in June, more than double May's 9.7% pace. The Korea Development Institute flagged U.S. tariff measures and Middle East instability as renewed risks, with tariffs returning to its risk list for the first time since February. June payrolls added just 63,000 jobs, well below the first quarter average of 183,000. Headline inflation eased to 2.8% in July, while core inflation ticked up to 2.6%. The U.S. Treasury shifted its quarterly refunding language from reviewing increases to reviewing changes in coupon and floating rate note sizes, and 61% of clients surveyed by BMO Capital Markets now expect 30-year supply to shrink. Washington also joined Tokyo in buying yen for the first time since 1998, using the Federal Reserve's FEMA repo facility to keep Japan from selling treasuries. So what does this mean for global investors allocating to Korea? Earlier, we said Korea's July exports jumped 62.8%. Here's what that actually means for you. The earnings engine is real, but it is concentrated in semiconductors, and the discount rate applied to it is being set in Washington rather than Seoul. With the U.S. federal deficit near $2 trillion and total debt near $40 trillion, long-end supply relief looks tactical rather than structural, which leaves duration risk as the swing factor in a Korea waiting. Watch the next quarterly refunding announcement for confirmation that 30-year issuance is actually being cut. Watch Korea's August export release on September 1st for whether the semiconductor surge holds. Watch the Korea Development Institute's September assessment for any change to its tariff and Middle East risk language. That's today's AI PRISM, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.